Welcome to LeonCo and welcome to your weekly financial news. Welcome to LeonCo and welcome to your weekly financial news. And on this week's financial news, we'll be discussing why is the stock market still rallying up? Well, there are a couple answers for why to this, but mostly they are based on the expectancy or the speculation that everything is going to go back to normal. As you've been listening through these couple of weeks, you've been listening that lots of economists and lots of financial professionals have been discussing the reality of having a V-shaped recovery. As time passes by, this seems more likely, but there are some factors that are not being considered when it comes to the discussion of this V-shaped recovery. But the things that are rallying or the things that are stimulating this probability is the fact that the stock market is very confident that the federal government is willing to put on lots and lots of liquidity into the stock market. This is by means of helping directly companies as giving up loans or buying bonds of different companies so that they can have this liquidity and pay off their debt. This is something that's been stimulating the stock market up and up and to the point that some people believe that we have already left the bear market and we are in the midst of a bull market as we were at the beginning of the year. Some people believe that by the end of this year, we'll be already back in the Dow 30,000 mark. This is not necessarily the reality, but this is something that is very speculative since the things that are happening in the stock market right now. But one factor that we need to take in is that since this stock market has been rallying up, it's behind the coattails that everybody's very optimistic about the vaccines that's developing and the treatments for this pandemic that we're facing. But there are things that are not being taken in consideration besides the fact that 20% of the population in the United States is still unemployed. Even though the unemployment rate for benefits has been decreasing, but their people are still being unemployed. And the reality is that by the company's restructuring and the economy that is going to start back up, maybe half of that percent is not going to be able to go back to their work. So this will continue to be a 10% of unemployment in the United States when everything settles down. So this is a big risk when it comes to the stock market and to the economy to have such a high unemployment rate in the United States. So this is just one of the factors that is going to hit the reality in the stock market in the next couple of months. Another thing that can hit the reality in the stock market is the opportunity or the realization that we can have a second wave of COVID-19 through these couple of months that we are heading into. This is not something that is written in stone, but this is something that experts and scientists have been discussing that could be a reality that could happen in the next couple of months if not taking the necessary precautions. We all know what is happening in the society, the movement that we're working. The people are moving into something that historically has happened, but not in this rate. But people need to be concerned that if the stock market keeps rallying up just in pure speculation, when that bottom hits, that bottom is going to be very big because we will be hit by the reality that the economy has not been stable, unemployment rate has been staggering up, and most or a lot of companies will not be able to sustain their work if the economy does not go back up to its normal state. So this has been your weekly financial news. Stay safe, stay healthy, and always remember to have that king mentality.